Good morning and welcome to episode 112 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, March 1st, 2023. Well, inflation continues to dominate the minds of investors and dominate the market's performance. We continue to see equities markets struggle and sell off a bit as precious metals do the same. They're kind of moving a little bit in tandem right now. And why? Well, worries about the Fed pivoting due to inflation. I know everybody expected, all market participants, etc., expected that with inflation coming down for a few months, that the Fed would go ahead and pause and then pivot to lower interest rates, not raise them. And they were working that direction. They went from 50 basis point rate cuts down to 25 basis point rate cuts, and everybody thought it's working, the Fed's going to stop, and they're going to lower interest rates, and it's time to put the party back in full gear. The only problem is inflation is starting to reverse, showing signs of slightly moving upward, and the Fed is talking strongly about continuing to raise rates and to do so for quite a long period of time in order to make sure that inflation is under control. So the markets are reeling, moving back and forth, all because of inflation and thoughts of what the Fed may do. Our good friend, Keith Fitzgerald, who is the founder of One Bar Ahead, I thought covered this pretty well last Friday after the core inflation numbers came out. Keith basically said the 10-year has popped and stocks have dropped in early going, and yet after yet another hot, in quotes, inflation report. This time around, it's core personal consumption expenditures price index, core PCE, that has jumped. And he goes on to say that the only people who don't understand what's happening apparently work at the Federal Reserve, where they've decided to destroy our economy. And Team Powell wants people to lose jobs as a way of destroying demand to reduce inflation. Newsflash, Mr. Chairman, you can raise rates until the cows come home, and it won't do any good unless the government stops spending money. Have you ever heard that before, by the way? Side note. Keith goes on, so why not pause and give millions of hard-working people a breather? What do you have to lose? I ask because the people you're crushing risk losing everything. Retirees in particular lost an average of 23% of their 401ks last year alone, according to Fidelity, and emergency savings have dropped off a cliff, and credit card debt is rising at an astounding rate. Well done, Keith. You know I'm with you, heart, mind, spirit. We've been saying the same things here at Getting Rich for quite some time. The problem is not interest rates. The problem is the out-of-control government spending, not balancing a budget, forcing the Fed's hand to increase the money supply and therefore result in inflation. There's no way around it until we stop spending money. You're 100% hitting the nail on the head, Keith. Let's take a look at the numbers from last week to this week. Today, gold is at $1,836.90 an ounce. That's down 0.15% from $1,839.70 last week. Silver's down about 4% to $21.08. It actually dipped below 21 briefly yesterday. It was $21.96 an ounce last week. Platinum is the only winner this week, up $10 to $9.69 an ounce from $9.59. That's a 1% move. And palladium is down 7%, our big loser in the metals this week, at $1,486 an ounce from $1,598 an ounce. With gold barely budging and silver dropping 4%, the gold-silver ratio is up to 87.51 from 84.11, and the US dollar is down slightly to 104.25 from 104.33 last week. Folks, in my opinion, this is what you need to watch. Keep your eye on the dollar. I believe it is flexing its muscles. It has been flexing its muscles, and we may have just seen the peak of that dollar strength. I think it nudged up to near 106, if not touching it, and is back down a little bit from there. I think we've seen the surge. I think the dollar will continue to recede, and therefore your gold and silver are going to get more expensive as time goes on. You know what to do. As always, we'd like to go ahead and have you join us or subscribe to us on YouTube, like us, send us your comments and questions, subscribe to our newsletters, our social media, but please don't ever forget that getting rich starts with keeping what's yours.